Hello everyone, how are you? It's Kei. I'm sorry I'm late today because I had the meeting and I just finished it, so I'm here now. So yeah, how are you everyone? Thank you for joining on today's live stream. This is the 25th of January on Wednesday. So looks like some markets active. So yeah, let's screen charts, and also I will be explaining my trade today I took on the USDJPY. Okay, so again, sorry for being late today, but I hope you enjoy this live stream until the end today. Okay, so let me see. Alright, Master of Carbon, Rajesh, Kevin, Christopher, Augustine, thank you for joining. And Roged, John, Manuel, and Razmik, Ditendra, Win, and Tam, Michelle. Alright, James and Tan, and everyone, thanks so much for joining today's live stream. So yeah, so now let me first explain how I took the trade on the USDJPY today. I already exited with a loss, but let me briefly explain that. So USDJPY, as you may know already, whenever I take trades, I take 3 different time frames, from daily all the way down to 5 minute, and look for the opportunities. So first, I usually follow the daily direction or the 4-hour direction. So here is an Ichimoku, and I'm still seeing that the daily is still bearish. I like this Kumo because Kumo has been thick and long, and also the market has been resisted by the trend line multiple times. So for me, this is bearish. In this case, I always look for the selling opportunity. I never plan to buy in this case. Yeah. So my view is downtrend still on this one. And after I confirm downtrend on the daily time frame, what I will be doing is I go down to the lower time frames. So I switch down to 1 hour. And 1 hour is showing now flat range because Kumo is Senko span, B is flat, Senko span A is down. You know, Kumo is composed of 2 lines, Senko span B and A. And the Senko span B flat, Senko span A angle is down. And Kijun Sen is flat. And the market broke the Kumo, but overall is range. It just goes up and down. It's range for me. It broke the support, but then now it's coming back to the Kumo or the Tenkan Sen. So 1 hour is still flat for me. So that means I can't confirm daily downtrend by 1 hour. And also I look at the 30-minute time frame too. And a 30-minute time frame looks like this. And when I took my entry, which is on this red vertical line, it was looking like this. So I was also seeing that the M30 Kijun Sen green Kijun Sen is down, and Kumo Senko span B down, and Senko span A was also down. So I could confirm the daily time frame downtrend based on the 30-minute time frame. So when I see this multiple time frames trending at the same time by Ichimoku confirmation, then finally I look for an entry confirmation. So I went down to the 5-minute time frame. In 5-minute time frame, I don't use Ichimoku, but instead I use different tools. I use the Bollinger Bands and stochastic as indicators, and also I do use the lines and the price actions to take trades. So technically, I executed my trade at 12:30 p.m. UTC today on 129.709. This was exactly my entry price. So this here I took sell. And I put the stop loss above the previous high here, which was 40 pips above. So stop loss was here. This is my stop loss, and this is my sell position. And so since I took the sell, of course I expect the market goes down this way along my direction, along with the daily and a 30-minute direction. My mind is I expect it goes down. But if it doesn't go down, then I would exit with a very small loss is my strategy. And in this case, I got, so the market eventually went up against my direction. Like this, the market just went up against my direction. And I just exited around this area. So I closed my trade. So again, this is where I took my trade. And this is where I exited my trade. So I always look for the entry confirmations. And the reasons why I entered here was because I found first the previous support became resistances. So sometimes the market breaks a support, and then it actually tests the previous support level and goes down. So that was actually one of my entry confirmations, so that the market should not break this level and still continues to go down this way, was my expectation. So that was my first one of my entry confirmations on M5. So this was based on the chart pattern. And so this was my first confirmation. And my second confirmation, so like this, I build up my entry confirmations like this. I don't simply look for one single confirmation from my entry. I always look for at least three reasons, three confirmations to take trades. So this previous support became resistances was one of my entry confirmations. And my second entry confirmation was on the Fibonacci level. So I drew the Fibonacci from top to down. In this I wave, I draw Fibonacci and extend it to the right. And you can see that this reversal level was exactly 38.2%. So this was my second reason of my entry. So I was trusting this level. I was trusting 129.82 area. And if it breaks it, that will be my exit, was my initial thought. And also I got this candlestick confirmations, like there's a doji and there was inside and outside bar breakout. So that was my other confirmation. But like this, I build up my confirmations before I take entries, and then finally took my trade here. So again, my expectation was that since daily was down and 30-minute was also down, I expected the market breaks the support. It did break the support, but then I was expecting the market continue to go down this way. Even if it comes back to the previous resistances on M5, I was expecting that it will be resisted and continue to go down this way. So because this is the major direction, higher time frame direction, right? So like this, I actually always look for the opportunities based on higher time frames Ichimoku direction, and plus in 5-minute time frames entry confirmations. So I combined these two strategies together and make my entries every time. So, and then the market reversed back, and I simply exited when the market breaks these resistances. So that was my exit confirmation. And here I want to emphasize is that so I look for 3 confirmations, but it doesn't mean, it doesn't guarantee myself that the market goes towards my direction. It never guarantees. So what does my entry confirmations guarantee, and why do I look for the entry confirmations? Let's say the market just goes down, and if it breaks the support, you simply sell, and you can keep holding until the market hits a stop loss and exit. This may be your strategy now. Usually it's a strategy, and that's why you put the stop loss, because you want to exit here. But for me, I always look for an exit timing before the price hit the stop loss. In this case, stop loss was all the way up here. This was my entry, and I exited around this area. So this is below the 50% to stop loss. And to the stop loss, I risk 2%. So I exited here, and this is below 1%. This was around 0.8%. 0.8% drawdown I took. So it covers the, these small drawdowns can cover the future big profits is my strategy. And that's why I exit very much earlier than the price hit the stop loss. And this is, I think, part of the risk management, because there will be some areas to exit before it hits the stop loss. And to look for an exit timing, I look for an entry confirmations. So that is actually my secret, I think. I look for an entry confirmations not to raise the win rate, not to expect the market goes towards my direction. In this example, in this particular trade, I took 3 confirmations, but let's say sometimes I can find 6, 7, or 8 confirmations when I take an entry. So even if I find 8 entry confirmations, it doesn't mean that the market goes towards my direction. But if I can find 8 entry confirmations, that means I know exactly when to exit when the market reverses against my direction. And with this mindset, I take trades and exit with the losses always. And that's why my drawdowns are very small every time I enter trades. So I don't let the market run with the losses. And I don't like to do it because psychologically it affects very much. Let's say, so now if I still holding the trade until now, how it looks like is this. So now I'm in the break even. I'm in the break even, and now I see another dead cross stochastic, and yeah, there was let's see, another breakout of the neckline. So I see multiple entry confirmations here again, but this is, this is something I don't keep holding the trade, because I trusted this resistance. When I took the entry here, I was trusting that this resistance level will not be broken. But if it does, we should exit. In this case, the market happened to come back to my position, and now it's break even. But we never know. This one, it actually, after the breakout, it was supported and went up, and it may have keep going up this way. This way. And I've seen this example so many times. And that's why my exit timing is very exact and very spot on like this. I don't take trades by the gut feelings. I never take trades by intuitions. I always think logically and take entries and exits so that it eliminates emotional stress, emotional like second thoughts, so to speak. So I think strategy will help you to be like a robot, but not exactly a robot, because robot can only do like 1 + 1 = 2, but human actually, by using the experience, humans can do 1 + 1 = 0 or 1 or 2 or 3 or any numbers. So based on the experience and logics behind, we have to take trades like this. So this was in a loss, but since I keep the losses small like this, only 0.8% drawdown, so I feel comfortable and I have more energy left and more money left in my Forex account to be able to take next entries like this. And we just move on our journey like this way. But again, coming back to the higher time frame, let's say on a daily time frame, this was downtrending and this is still downtrend. So again, I only look for the selling edge. I never buy in this case. So let's say M5 again was showing bullish N wave after I took an entry. I mean this bullish N wave, but I never enter here because this is against the major downtrend, right? If it's downtrending in higher time frames, then that means M5 should go down in the long term. In the short term, we may see this kind of N wave bullish against the major direction. You may see it so many times, 1 minute or 5 minute or even 15-minute time frames. The market can go back against the major direction. But if it's downtrending, then lower time frames should go down in the long run. And that's why I look for an setting edge always. And I think same is true about the confirmations. This is also another secret of mine, is that whenever it's downtrending, I mean the market was downtrending in higher time frames, right? And M5 also, it has been downtrending too. M5 started to be downtrending from here and ended downtrend here when I took my entry. Well, still downtrending technically speaking, but still this is downtrending. So let me just give you a very simple mindset or the way to see the candlesticks or patterns or the signals. Until I realized this secret, I struggle a lot. And this is a reason why I became a trend follower, is that again, this was downtrend on M5, right? M5 downtrend. And when it's downtrending, let's say you take the stochastic to trade, right? And I used to take sell when it's dead cross and buy when it's gold cross. So in this case, stochastic dead cross happened here. I took sell, gold cross and buy, and another dead cross sell, and gold cross buy, and dead cross sell, and so on. So it has been downtrending. So in the downtrending market, only the dead crosses will work, but gold crosses can be fake as a trend follower. So I always look for the selling opportunity means I always take the dead crosses on stochastic to sell. Let's say, so again, M5 trend started from here, and let's say it ended here, downtrend. Between these two red vertical lines, if you see these dead crosses, if you take entry here, sell, you make profits, right? And also, if you take sell here, again another dead cross in stochastic, you take entry sell here, you make profits also, right? You make profits, and another dead cross happened here. You take sell here again. This one may be break even or a small loss, but out of 3 dead crosses, 2 will be profitable and 1 will be break even or a small loss. And this is true because this is downtrend. But sometimes you may think to enter buy on gold crosses when it's downtrend, or sometimes I get these comments like, when I say gold cross, do you stop trading? My answer is no, because when it's downtrending in higher time frames, these gold crosses can be fake. So let's say gold cross, the first gold cross here, if you buy, you don't make profit because the market then breaks support and continue to go down. And second gold cross also, when you buy here, well, in this case you may be able to make profit, maybe if you scalp, but then the market just broke the 2 supports in I wave very sharply, and you may be in a loss if you couldn't exit with profit around here. So like this, gold crosses can be fake when it's downtrend. Is really true. And again, when it's downtrending, based on the wave analysis, I should be on the reversed N waves. Like this, reversed N waves should happen when it's downtrend. So that means it shouldn't. The market should not break the previous high. But if you start to break the previous high, that means the market is becoming range in terms of the price action. And that's what I saw here on my entry. Again, I took my entry. Hold on, let me see. I'm just sharing the logics behind on my exit timing. So I took my entry here, and I exited around this area. And this was because I saw multiple reverse confirmations, but mainly I saw the break of the previous high, which I trusted originally. So it broke. So this is, for me, becoming range. So that's why I exited. And when the market started to break the previous high like this, then both gold cross and dead cross can be fake. So in a ranging market, gold cross and dead crosses can be fake at any time. And when it's downtrending, only the dead crosses can be true. Gold crosses can be fake. And when it's uptrending, gold crosses can be true and dead crosses can be fake. So let me just finally take an example of the uptrend and gold cross. So like in this one, so let's see, let me find, okay, maybe this is good. So uptrend started from here and it ended here on the top. And there were multiple gold crosses, so let me just put the vertical lines on the gold crosses. First gold cross was happening here, and when you buy, you make profit, so it was true. And second gold cross happens here, and this gold cross happens above 80% level. And I give these comments maybe if you see gold cross above 80 level, do you still enter because this is considered to be overbought? But my answer is yes. I still take the gold cross above 80 because I know it becomes true when it's uptrend like this. So when I buy here, I also make profits. And finally, another gold cross happened here, and then the market started to reverse. It didn't really higher, but it just reversed. So if you bought at the last gold cross, then the breakout of the support should be your exit timing. But this one, you make profits. This one also second entry, you also make profits too. Because this is uptrend, right? And when it comes to dead crosses, here dead cross, and also here's another dead cross. Whenever you sell, well, in this first dead cross, the market got sold very much, but then closed like a pin bar, and then it went up towards N wave, bullish. So when you sell here, you're in a loss. On the second dead cross also, usually the dead cross above 80 is considered to be powerful or trustable, but when it's uptrending, they become fake, like in this example. If you take a sell here, then the market doesn't go down, but it just goes up, and you're in a loss. So this is simple, like one of the simple mindset or simple, my trend follow strategy. And this is the reason why I look for the buying edge whenever it's bullish in higher time frames, and I look for the selling opportunities when it's downtrend in the higher time frames. So I took an example of these gold crosses, dead crosses, but whether you use stochastic or RSI or MACD, this is all true. Becomes all true. Or even if you use the moving averages in gold cross to buy, you have to see the higher time frame situation. When higher time frames bullish, then all gold crosses should be true, and dead crosses should be fake. This is the basics of the trend follow mindset. And so no matter which strategy you use, this becomes true. Not only the indicators, but also the candlestick patterns will also be true. You see these dojis, many dojis, but when it's uptrending in higher time frames, all these doji breaks bullish becomes true, and doji break bear should be fake. So let's say, for example, here in this case, there are multiple dojis, and on this bearish candlestick, you see this, it broke the previous doji support. So when you see this one single candlestick, you may think that this may be bearish, but it's not true because this is uptrending in higher time frames. So I will wait until the doji breaks bullish and enter buy. That should be the correct strategy. You never sell when it's bullish, no matter which confirmations you take or no matter which indicators you use. If you just keep this rule and build your own strategy, I think it should be fine. Because trade is really that simple. It's either the market goes up or down. It's either one of these two. Except for range, it's either up or down. So trend itself is really simple, and the market itself is really simple. But I think it actually makes stats that makes it difficult to think about. So let's say you happen to take the last gold cross, and the market just reverse. It happens. It happens to me. It happens to you. And in case if this happens, if you happen to take entry like in this timing, then you should know when to exit. You have to exit when you confirm uptrend is ended on M5. In this case, the exit confirmation is the previous support level break or dead cross, can be also another exit confirmation, for example. But whichever combinations you use, when you see the market start to reverse, then you should exit. That should be an exit timing. And that's how I exited my trade on today's USDJPY. Just earlier today, I exited with a loss. So losses are okay as long as you keep trading in the trending markets. Then you'll be able to capture these big pips. But sometimes we happen to capture at the reversal entry. Usually this part is called a fake out. Usually it's called a fake out. And also I get the questions how to avoid the fake outs. And my answer is to know when to exit. Then you know how to avoid the fake out. In this case again, I took entry here based on the confirmations of the previous support became resistances and Fibonacci level here, and also this inside bar breakout. So I was trusting this resistance on M5 while higher daily time frames down and 30-minute time frame was also down. I was trusting this resistance because the market should go down on the reversed in the waves on M5 like this. So it may retrace along the way up to the resistance, or it may retrace to the resistance on M5, but it should be resisted and keeps going down. Otherwise, I exit is my exit mindset. And with this mindset, you know exactly when to exit so that you don't keep the losses run and you don't keep the positions with the losses along the way. So stop loss for me, I took entry here and I took the stop loss here above the previous high, 40 pips above. But stop loss for me is the worst case scenario. Like sometimes after my entry, I enter trade in 10 to 20 minutes, sometimes out of nowhere, the market just goes up in I wave and touches here. It happens to me before a couple of times. And to avoid the worst case scenario, I put the stop loss. If I didn't have the stop loss, then the market may keep going up and my drawdowns will be bigger and bigger. But by having a stop loss, this is my worst case scenario to exit. But I always look for an area to exit before the price hit the stop loss, like this example. So that was my thought process for my entry on the USDJPY, and that's something I want to talk about it today. So in about 16 minutes there will be a news in Canada, rate decision. So whoever trading right now in Forex, just be careful by the news, it may impact the market. And then after that there will be another BOC, Bank of Canada press conference. So be careful in the news in Canada today. Okay, so yeah, since I just finished my trade, and I guess I will just end the live stream for now. And although I see many comments, I see some questions. Please save these questions for tomorrow. Tomorrow I will be doing another live stream, so please save these comments until tomorrow or on Friday, whenever I do the live stream. And I wish you to continue to learn. And if you learn something new from my live stream or the videos, that will be great. Okay, so again, thank you so much everyone for joining today. I hope you're having a great day today. And make sure you check charts by Ichimoku Kinko Hyo if you're using it, and make sure to take trades by the trend follower mindset like myself. Okay, so last announcement is that this is only for the Ichimoku members, but there will be an Ichimoku Zoom Cafe today in about 15 minutes from now. So to those who are Ichimoku members, I will see you in 15 minutes to meet face to face. And for those who are joining in public, I will see you in the next one. So until then, please stay healthy, stay safe, stay gold. Thank you very much, everyone. Bye for now. またね。